The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We've reached the final day of the trading week, and quite a week it's been, folks. It's going to be one for the record books, and we're kicking things off in negative action this morning so far. You're looking at an S&P's negative by about 30 points right now, trading at 37.49. We were as high as 38.20 at the highs yesterday. Quite a sell-off coming into the closing bell. We got some fundamental news. We got Johnson & Johnson out with their efficacy this morning. We had Novavax out after the closing bell last night. We'll get over both those in a moment. Checking in on the markets. As I mentioned, S&P's down by about 0.8%. NASDAQ 100 down about 0.8% as well, 13,076. We were as high as almost 13,400 last night. Dipped below 13,000 briefly this morning on a couple occasions. The Dow is off 260 points right now, 0.8% as well. Trading 30,243. We're up as high as 30,800. Talk about an acceleration this week, folks. My goodness, right? And the Russell right now, negative 8 points, trading at 2,091. All of this action right at 8 o'clock on the Johnson & Johnson news. Why don't we jump over it to see what we're talking about here? Johnson & Johnson. So their vaccine is the single-dose vaccine. That is very important. Obviously, easier to administer and to distribute across the globe. You have Johnson & Johnson. It's kind of a double-edged sword here. In one case, the positive news, as the headline states, provides strong shield against COVID, and that it basically eliminated all deaths. Here we go. Particularly effective against stopping severe disease, preventing 85% of severe infections, and 100% of hospitalizations and deaths. Excuse me. If we get a vaccine that just prevents anybody from going to the hospital with this, that's it. That's all we need, right? On the flip side of that, though, 66% effective was the number there. Getting into it, let's see if I jump over to this one. So 72% effective against COVID-19 in the U.S., but what you have is these different strains, whether it's the UK strain, whether it's the South African strain, getting a lot of attention recently. So 66% effectiveness overall, Johnson & Johnson this news just out at 8 a.m., okay? 66% overall, 72% in the U.S., 66% in Latin America, and 57% in South Africa after 4 weeks. Now, jumping over to Novavax. Novavax out with their numbers last night. We'll jump over to both these charts in a moment. Novavax, 15,000 participants. And getting into the numbers, I want to be exact here. Here we go. So 95.6% effective against the original COVID-19 strain. 85.6% effective against the UK strain. But you get down into it, folks, and you're talking about only 60% efficacy versus the South African strain. This South African strain, which just came about in the U.S., 2 cases, I believe, in South Carolina, I want to say. Not certain. Believe it was South Carolina, found out yesterday. A little bit worrisome, just from a humanity perspective and from a market perspective, bringing it back to stocks. Remarkable what happened with this stock last night, though, folks. Check this out. From 134 down to 111 up to 220. My goodness, right? At first you said, oh, my goodness. But, man, talk about a spike to 221 on Novavax. My goodness, you put this thing on a daily. It's not going to include it, but you're well above where we were in August now at 189. Remarkable acceleration. Something to keep in mind, though. Great news with Johnson & Johnson in that all you have to do is prevent people from getting sick and dying, folks. If nobody needs to be hospitalized, that's the core of it. We're over this thing. So encouraging news there. But the worrisome part of my aspect is that you're seeing these new strains. You're seeing the efficacy of some of the vaccines not quite effective, especially the South African strain, which is now in the U.S. And the fear here, and we saw it a little bit with the market. We rebounded nicely as the market kind of digests what I'm talking about. which is, and I'm going to zoom it in even on 1 minute so you can really see the reaction. And the reaction on that headline number, the efficacy of the Johnson & Johnson vaccine, not good. As the market processes the fact that, hold on, wait a second, maybe we don't need to eradicate it. Maybe this is going to be the ability to distribute this vaccine, get it out across the globe. One shot is all it takes, and nobody ends up in the hospital. Market now above where we were prior to this at 37.48. We're sitting at 37.56. You back this up to the close last night. There's your 4 o'clock action. A little bit of negative action. That might have had to do with the Novavax, not sure. Nonetheless, S&Ps, watch out for volatility, folks. Again, this is a 1 minute chart. You just have to go back to 7:30 this morning, and we were up above 37.60. You trade down 30 points, and we trade up 30 points just in the last hour, folks, let alone you put it on a 15-minute, right? And we're talking about from 38.40 on Wednesday to 3,700, basically, at the end of Wednesday. Thursday, we go to 38.20. We trade down 100 points from the highs. This market, a little bit of volatility here as it's trying to figure out where it wants to go. Let's jump over to the VIX. As you may expect, an elevated VIX with the market in negative territory, almost a 33 handle on the VIX right now. Now, consider something here, folks. You got a 33 handle on the VIX, and we're basically sitting at all-time highs. I mean, yeah, quite an acceleration, all right? We're all aware of the volatility we're facing, even in the S&Ps. But my goodness, we're sitting with the VIX at 34, and we're sitting at stratospheric, not catastrophic, stratospheric levels, as in we're up in the stratosphere here at all-time highs, and the VIX is pointing to a little bit, and I'm kidding here, it's not a little bit, right? The VIX is pointing to some worries in this market, probably rightfully so. We're not out of the woods yet with COVID, folks. New strains popping up, right? The UK, now we get the South African strain. Some of the vaccines, not quite effective. We will get over this. This isn't a doom update. You know, we will get over this. It just might take a little bit longer than we first thought when you tie it back to basically what we thought was going to happen when we got the first efficacy numbers from Moderna and Pfizer that was straight out 95%. That's it. Oh, my goodness, 95% effective. That's it. We just got to get the vaccine out. 95% effective. That's going to do it. Well, now we're seeing if that South African strain takes hold, some of these vaccines out there, we're not quite sure yet. I haven't seen numbers from Moderna or Pfizer, but you look at Novavax and you look at Johnson & Johnson, both out with their numbers in the last 24 hours, both out with their numbers since 4 o'clock last night, and both of them showing that these strains are reacting differently to the vaccine. Point being, okay, we're going to get over this. Again, 3, 6, 12 months, whatever it is. If it takes a little longer and we have to recalibrate those vaccines, however it works, we will get over it. But you're going to see some volatility as the market digests the implications of possibly new strains and not quite the ability to have a 95% number every time we get a shot into someone's arm. We'll see where we go from there. Let's check in on some of the FANG stocks as we kick things off. You got Apple shares charged to 142 yesterday, up to almost back, right where we closed Wednesday coming into their earnings, and we're back right at the lower echelon. Pretty interesting as we come back right to where we were pre-market on Thursday. We're trading at about 136 on Apple. Microsoft shares, strong numbers on Tuesday for Microsoft. We've been chopping around between about 232 and 242. We got to check in on Tesla. How about it? Tesla trading at about 827. And let's check in on the big dogs, we'll call them this week. GameStop, 357. You got Robinhood back in action. Man, we got to talk about Robinhood, right? $1 billion they had to go out there and get to increase their balance sheet overnight. We'll be right back.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There's no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the markets charging higher on that Johnson & Johnson news after an initial plunge lower. We have the S&Ps now negative by just 15 points. NASDAQ 100 negative by 68. We got the Russell positive by 3 points now. Jumping over to Robinhood, man, talk about the headlines coming out, right? So first it was reported that they had to tap existing credit lines to the tune of hundreds of millions of dollars. Now it comes out that literally Robinhood had to raise $1 billion basically just to stay solvent. Remarkable when you consider, if you're all familiar, folks, with trading places, man, if you don't stay solvent, they'll kick you right off that exchange. I say it in jest somewhat, but Robinhood, remarkable here. So this has to do with when you're talking about the clearing firm that they're using. So I'm trying to get down to the exacts of it in terms of the $33 billion. All the brokerages, come on. Here we go. So you have the clearinghouse demanding, here it is. So the DDTC, which is the clearing firm, not the firm. Let me get exactly what DDTC is here. Shame on me for not having this up. Regardless, folks, I'll pull it up at the break. You're talking about that basically they demanded collateral from the brokerages industry-wide of $33.5 billion, up from $26 billion. You're talking about $7.5 billion that the clearing firm demanded from the brokerages when those trades get cleared through, okay? And Robinhood just couldn't cut it. They had to go out to the public and basically raise $1 billion. Now, it's going to be really interesting when they go IPO later this year in terms of the press and the PR that they have to deal with. We'll see how that handles. We're all familiar with what happened in terms of the trading being stopped. Don't agree with that whatsoever. So here's an update I got from TD Ameritrade last night. Just in my email, I'm a TD Ameritrade customer, Thinkorswim. They are a sponsor as well. So this is what they have in place as of last night for today. Okay, you're talking about some restrictions following on the following securities, all right? We're familiar with some of them because of the action so far. You're talking about AMC, you're talking about Express, you're talking about GameStop, Nokia, Bed Bath & Beyond. I believe BB is bankrupt Blockbuster. Koss has been a big one. So here's the first thing. Stocks, 100% holding requirement. Got to trade it in cash, not marginable. Completely understandable, in my opinion, in terms of what's going on here. Yesterday, you had GameStop going from 500 to 100 in a matter of minutes. Okay, long calls and puts will be allowed. Covered call and short put orders may only be placed with a broker. They want you on the phone for that one. Covered calls only allowed if your account currently has the shares. Short puts only if you have the maintenance/cash to cover the entire exercise amount of short puts. All other complex option orders not accepted for these equities listed at the top here. We may also implement additional restrictions on the opening of option trades that expire Friday, January 29th. Keep in mind, the list is not inclusive of every security restriction and may change at any time. Folks, these brokers, all right, I don't agree with what happened at all in terms of you cannot have brokers limiting by their choosing which equities people can buy and sell, especially when you think about the implications, right, of now you have Robinhood charging no commissions. You have Robinhood getting paid by firms like Citadel for order flow. You have Citadel funding short sellers in the market, and you have Robinhood shutting down buyers of equities and funds that Citadel is investing in are getting hurt by. Obviously, implications in that market. The other side of that, though, is that these companies didn't have the capital to be able to do that. I mean, they might be out of business if they were allowing that same trading. Now, I don't understand why, you couldn't allow cash trades to exist. I don't understand why this list maybe couldn't have been done yesterday. I think what you saw happen to folks yesterday is that there was an all-out solvency problem. They had to basically slam the brakes. Now, we'll find out, and they should look into this, okay? Because it's not right, and that doesn't mean it's not legal. That's a big difference here, and we're going to find out. If it's done simply for the reasons of insolvency, that's one thing. There's obviously other rumors out there, et cetera, claims, allegations. But when you look at this in terms of where we are today, this seems like a very reasonable restriction list, all right? And I'm sure this is across the board. This is just the one I got from TD Ameritrade. I'm not sure. I know Robinhood said they're going to allow some limited trading in those equities today. Very vague. I don't even know what that means. At least TD Ameritrade puts it out pretty clearly in terms of what's going on. Long calls and puts, all right? As long as you're holding the stock in cash, all of that stuff, that makes sense. So we'll see where that goes from there. We will see. All right. Jumping around to what else we got going on. Stocks moving this morning. Stocks making moves. We'll jump to a stock with some fundamental news in the biotech, not to do with COVID and Biogen. So it looks like Biogen, the FDA has extended the review period by 3 months for its experimental Alzheimer's treatment, I'm not even going to try and pronounce that one. Nonetheless, positive news for Biogen. You're up from 270 up to about 299. Look at this market. I got to jump back to the S&Ps, folks, man. When I saw that Johnson & Johnson news come out, I was just publishing an update for my subscribers, and one of the things I was talking about was saying, listen, we're really near highs here, and you saw some real volatility yesterday. And you got to be aware with these strains coming out that it might not be as easy as we once thought. That's the only point. It might not be as easy as maybe we once thought. If you keep that in mind, I'd be a little bit wary. If you plan on selling anytime in the future, folks, it might be a good time to lighten up. There's nothing wrong with lightening up if you have like a short-term plan in any ability. Because, yeah, if you're going to hold, if you're in a long-term investment portfolio and we're going to get on the other side of this in 3, 6, 12 months, 18 months, I don't want to say worst-case scenario because we don't know what worst-case scenario is right now. If anybody tells you they're certain of anything right now, explain to them what's been happening in the market, all right? There are tail risks, obviously, as a pandemic is raging still. There's obviously tail risks. New strains are coming, but we're going to get over this. But that doesn't mean that we're out of the woods just yet, folks. And look at where we are in the S&P. Look at how quick things can cascade to the downside here. And think about what's going on. We almost had some of the biggest retail brokers in the world going insolvent overnight last night. And you got the S&P sitting at all-time highs. Just be aware of that, folks, as we get the news from Novavax last night, their efficacy versus South Africa. We get the news this morning from Johnson & Johnson. A little bit dicey when these vaccines have different efficacies versus different strains, and it's all but assured that new strains will keep coming up as time proceeds. So be wary out there with this market sitting all-time highs. We got a glimpse this week of the possibilities in terms of the rapid movements we see on fundamental news, and we'll leave it right there. Let's jump back to the VIX this morning as we're getting the market charging higher. Still a VIX above 30 right now at 31.77. Checking in on some of the biggest stocks out there. AMC at 13.08. And how about silver? They're running silver, folks, almost up to $28 right now. Silver up $1.70 at 27.62. You got the gold contract this morning up $35. Look at that acceleration. Stay tuned, folks. We'll be right back after the break.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&P's minus 14 points right now. I'm going to jump back to that Robinhood article because I pulled it up. So the term I was looking for, the Depository Trust and Clearing Corporation, all right? They clear most of the trades for most of these brokerages. Now, what you see happening here is that one key consideration for brokers is the money they put up with the Depository Trust and Clearing Corporation while waiting a few days for stock transactions to settle. This is the key part here. All right, those outlays, which behave like margin in a brokerage account, can create a cash crunch on volatile days, say when GameStop falls from 483 to 112, like it did at one point during Thursday's session. They are on the hook for some of those losses potentially until those trades clear. You need the capital to be able to absorb those losses while that volatility is coming in. What you had happen is you have the DTCC, as they reference it in this article, saying this stuff is just too risky. We don't trust that these guys have the cash to be able to withstand settling these things 2 days from now, because in 2 days, who knows what price they could be. It could be zero. I'd say a valid point, okay? That doesn't mean that it's right that they just turn off access to these equities, because, you know, we're all bright people out there if you're listening to TFNN. Obviously, the short sellers are in control if retail brokers just turn off the ability to buy the stocks that the short sellers are getting hurt into. But you got to consider the other side of that aspect, where they literally were on the hook for billions of dollars of losses over that clearing period of a couple of days. The DTCC came and they didn't put the exact numbers, as I mentioned, on any specific broker, but industry-wide, they said that collateral requirements jumped $7.5 billion. And on a percentage basis, it's mammoth, right? It's like 30, 35%. So remarkable action, folks. We didn't even get to. We got so much going on. You had Caterpillar earnings today. You had Eli Lilly earnings today. We got Amazon earnings next week. It just keeps going, folks. Stay tuned. We got a man, Larry Pesavento, coming up live next. Live programming all day at TFNN. We'll be right back, folks. Thanks for tuning in.